Hi folks, this is Sean Hyman from the Currency Cross Trader, and I wanted to talk to you today about a 3,000 pip move that is just around the corner for pound dollar. So it's GBP slash USD. We're looking at it on the weekly 5-year chart, and we're seeing a triangle, symmetrical triangle form for several years here, as you can see right there traced out in black. Um, and again, these typically have about 5 passes back and forth. So you've got 1, 2, 3, 4, right in here is 5. So we're in the fifth inning basically, or the final inning rather. Let me say it that way, not the fifth, the final inning of this symmetrical triangle. A break is imminent in the weeks and months ahead, and we're going to see a 3,000 pip move head out of this. So 3,000 pips from the point at which it breaks the symmetrical triangle. If it bounces off of this, of course, you're looking at 154 here to 165 here. So you're looking at 1,100 pips there before it would even get to the 3,000. So if we see the dollar crater again, then you're going to see the breakout to the upside, and you'll see over the and this will take possibly a year or more. Talking about a long-term move, but we're also talking about thousands, literally, of pips to be had here. A move to 195. Should this break solidly 154, that's a bit of a concern. If it breaks this green horizontal support that we see here, that is also held for probably a year and a half now, at around 152.67 roughly. And again, this is not to the pip, but roughly. If it solidly breaks that, then the likelihood of us seeing 124 becomes very real chance at that point, and see the 3,000 pips head downward. If I were a betting man, I would bet that the move is going to be to the upside because of the long-term decline that we see in the U.S. dollar, that we've seen really ever since we came off the gold standard and money's been able to be printed. So that's where I would initially bet. But with that said, if this thing came through both these supports, obviously I'd be willing to get short. So again, if this is something you want to watch because we're at one of these boundary areas right now. 3,000 pips to be had from the point of breakout down to here as a minimum price target. Could go further. That'd take it down to 124 area as minimum price target, or if the break is above 165, then the minimum price target of 195 on pound dollar. So huge amount of potential here. Again, you want to trade long-term patterns with micro lots. I would suggest trading no more than 1 micro lot per $1,000 in your account. And if you're wanting to enter with a potential long trade, you can do that with the micro lots with that ratio that I talked about, and enter long in this area. And if it breaks to the upside, if it bounces here, it'll go to the top of the triangle first. You got a lot of pips that can be made there, 1,100 pips, plus you can move your stop up significantly, lock in profits even before it breaks out. If it breaks out and moves up materially, then you can move your stop just outside of this, just to the inside or outside, whichever, depending on your level of aggression, your stop there, and then let this thing trade on up. So it won't be a straight shot. It'll zigzag all the way up there, just like markets normally do. It will take time, but you will be surprised at how quickly this does transpire relative to how long it took for this thing to coil up and wind up. And so, you're looking at about 3 to 3.5 years of coil up, and it would not surprise me if you see it hit one of these targets within a year and possibly even months. And so we're talking about thousands of pips to be had, still relatively in the near term when you're looking at it from a long-term perspective. In other words, what's 1 year out of a 5 or 10-year chart? It's not much, and for thousands of pips to be had in that 12-month period would be huge as well, especially all wrapped up in one single trade. So be on the lookout. Watch the 154 level and the 152.67 to the downside. Watch the 165 level to the upside. Also, an initial point of resistance in the near term will come in at roughly 161-ish. So if you get a bounce and it runs up to 161, you could always move your stop up some, maybe halfway between all that, and then see if it makes it to the top of the triangle, which is very likely. If it does, again, you can move your stop up, slightly below this small resistance point at 161. If it breaks 165 and starts to head north, you might move your stop, just below the triangle. Let it get notably above, and then just keep, moving your stop up every 500 pips or so, and give it plenty of wiggle room, because it will gyrate both up and down on its way up. But that's how you would play it on the upside. So again, two potential breaks. You want to let the market decide which way it's going to go, and go with whatever the market deals, and just know that there is thousands of pips to be had once the breakout does occur. So hope that is hope this will be a blessing to you, and just wanted to point out this long-term pattern. I don't think you see a lot of people point out long-term patterns to you where thousands of pips can be made in one single trade. So enjoy this trade, and watch for the breakout. You might want to keep this one and also the Euro Yen one that I discussed with you in an earlier video up on your charts, just so you can keep an eye out on those two, because there's a lot of profit to be had. Thanks so much for watching. Bye bye.